Welcome to Investors Insights, where today's topic is deal or no deal. So a lot has been made, a lot of discussion around the Middle East right now. So let's just get right into it. So Trey, give us a quick update on the Middle East. A lot going on. Is the deal done or is the deal not done? And then talk about the Fed.
Yeah, absolutely. Thanks, Bobby. So let me start by saying that we're recording this on Monday morning. Obviously, by the time this video comes out this afternoon, things may have completely changed. But as things stand now, there's two massive meetings this week. The G7 is meeting in France, along with the Iran-U.S. deal potentially being signed during that meeting in Europe. Vice President Vance may be in attendance to sign. So that is exciting. At markets this morning, we saw oil prices drop to 80 and potentially below 80, and we saw the stock market rally on that news of a likely deal. Now, this isn't the first likely deal we've seen, so we advise caution as we always do, and want to see where the dust settles. But the market's reacting positively. Interest rates are down, oil prices are down. And then that flows into the second most important meeting this week outside of the G7 and the potential Iran meeting in Europe is domestically. The Federal Reserve is meeting this week. This is Kevin Warsh, the new chairman of the Federal Reserve. This will be his first meeting as chairman. Then after that, it will be his first press conference as chairman. Now, Kevin Warsh is not a big fan of the press conferences. He's not a big fan of forward guidance. He has talked and written papers warning against the risk of putting too much out there and then locking yourself into estimates that you have for the future. He's more believer in relying on current data and not locking yourself into expectations. So it'll be interesting to see how he handles the press conference because you can't just completely cut off financial markets from Fed expectations. They've been built into what financial markets expect, and they've been built into where futures are pricing in. And so see how he does that. Is it a hard cutoff, or does he kind of slowly transition us into more of a quiet Fed? And also see how he talks about the other Fed governors he's meeting with. Now, he's the chairman, but he's only one voter. He doesn't decide everything. And so that'll be also interesting to see the dynamics there of the new chairman and the other members of the FOMC, see if there's any disagreements. There was a high-level disagreement in the last meeting. Does that roll over to this meeting? Obviously, the news events that are coming out of Europe this week will impact the Fed. Inflation is the Fed has two mandates: low unemployment and low inflation. Well, we've been getting surprisingly blockbuster jobs reports the last few months. So it seems like employment's handled. So then it really only has one mandate, which would be inflation. And so how does he talk about news events of an ever-changing Iran war versus inflation versus the reality of more sticky inflation? I know Ty's going to talk about that in more detail, but that's going to be extremely important as well, is how the new Fed chairman addresses that. So a big week of meetings and news events around the world. So a lot to watch and digest here.
Yeah, it really is a lot going on this week. And then Ty, we got an inflation report. Inflation looks like it's coming back up on us, but also talk about the common man CPI that we look at as well.
Yeah, so we got the regular CPI report, which is what the Fed releases and what is measured, by economists, and that was 4.2%, which obviously starting with a 4, not great, definitely higher than what we were looking for. I think we could all agree that oil prices, probably have a large say in that, and energy prices, in general. With that being said, we partner with research partner is Strategas here, and they have a common man CPI, which really it's proprietary. They only combine the components of things that people must buy, and so they consider that food, energy, shelter, insurance, and children's clothing. So sometimes you see the core CPI on the news. That's kind of from an economist perspective. This common man CPI, they try to take the consumer perspective. Well, that was actually up 4.6% as opposed to the 4.2% of the regular CPI. Since the middle of 2020, prices in the common man CPI are up about 32%. The headline CPI is up about 30%. And the problem is wages have only increased 27.5%. So as things get more expensive, wages have increased, but they're not keeping up with inflation. As Trey alluded to, that's something that we really want to keep an eye on and something that the Fed's going to keep an eye on, because while the employment perspective looks pretty good, the inflation numbers that we're getting are just a little bit high, and it might bring in that term. I don't think the Fed will use it, but is this energy story a little transitory or temporary? And that's something that needs to be thought of and needs to be discussed further.
Yeah, we saw a big second wave of inflation back in the 70s. So we're trying to see if we are going into a similar type of second phase of higher inflation. But it's obviously very important what impact it has on the economy and the markets. But also, one indicator that we watch carefully is the CEO confidence level, which, as you can see in this chart, has ticked back up in recent weeks. And this indicator looks at how CEOs view the economy 12 months from now. And we watch this indicator because CEO confidence impacts business investment that they might make. It impacts future income potential for the workforce, and it impacts the confidence that can impact corporate earnings, which obviously is a key driver of stock price growth. And then also, as you can see in this next chart, we are also seeing consumer spending continue higher, even with the higher inflation that Ty just talked about. And so obviously the consumer continues to be a key driver of the economy. So with increasing CEO confidence and a strong consumer, the backdrop for the economy and markets are positive as we finish the first half of the year here. So obviously we're watching the Middle East, we're watching the Fed, we're watching inflation come back up higher, then also consumer spending and CEO confidence. So we hope that everyone is having a great summer. If you have any questions on what we've discussed today, please call us, send us an email. We love the engagement that we have with our viewers. Thanks and have a great week.